You're sitting in a beige office. Your HR rep slides a glossy folder across the desk. They call it a benefits package. I call it a hallucination. I have a master's in finance, and I've spent 2 decades watching smart people walk into this buzzsaw. That 401k match they keep talking about? It's not a gift, it's a bribe. It's there to keep you from realizing that your future has been sold to Wall Street for pennies on the dollar. The retirement advice from 1995 is a death sentence in 2026. You aren't building a nest egg, you're funding a banker's 3rd yacht while you pray that the system doesn't pivot before you hit 65. Newsflash, it already pivoted. The game is rigged, the deck is stacked, and the safe move is the most dangerous one you will ever make. In this video, I'm going to show you why the retirement dream is the ultimate trap and what the smart money is actually doing to stay free. Think about your last trip to the grocery store. You see the total on the screen and your stomach drops. That's not market fluctuation. That is the sound of your retirement account dying in real time. Gurus love to talk about a 7% return. But if your cost of living is jumping by 12%, you aren't growing, you're shrinking. Think about it like this. If you saved $100 in 1970, it could buy a whole cart of groceries. Today, it might cover the eggs and a gallon of milk. If you save today's dollars for 2050 prices, you aren't planning for a vacation, you're planning for a disaster. Your savings are melting like ice on a Florida sidewalk. If you don't control the value, the numbers on your screen are just a lie you tell yourself to sleep at night. Let's look at the 401k. The gurus call it your account, but try to touch it before you're 60. Try to move it into an asset you actually control. Suddenly the walls close in. You realize you aren't the owner. You're a beneficiary at the mercy of the bank and the government. They decide the rules. They decide the taxes. And if you need that money for an emergency, they slap you with a 10% penalty. It's a jail for your cash. While your money's locked up, Wall Street firms are charging you fees every single day. Even if the market crashes and you lose 30% of your life savings, the bank still gets paid. They get their cut regardless of your performance. In this way, you are taking 100% of the risk, but they're taking a guaranteed piece of the pie. Is that really your money, or are you just holding it for them while they play with it?
Here is a question your financial advisor won't touch. Who is the majority owner of your 401k? If you said me, you're wrong. It's the IRS. You're building a house on a foundation owned by the government. Look at the U.S. national debt. It's a mountain of fire. When that debt comes due, where do you think the government is going to find the cash? They are looking at your retirement fund like a hungry shark in a fish tank. You are deferring taxes today because you think they'll be lower later? That is the most expensive bet in history. You're taking 100% of the market risk, but the government owns a 40% success fee they can change at any time. You're not saving money. You're growing a garden just so someone else can harvest the fruit. If you don't control your tax future, you don't control your retirement. This is the part that actually makes me angry. The system asks you to trade your health for a check. It asks you to work 40 hours a week during your 30s and 40s when you have the energy to actually live, and it tells you to save your joy for age 65. But what if later never looks like the brochure? In finance, we talk about return on investment, but we never talk about return on life. If you wait until you're 70 to travel, your knees might not work, your energy will be gone. You'll be spending that saved money on medical bills instead of experiences. We are trading our most valuable asset, time, for a currency that is losing value. That is a bad trade. Real wealth isn't a number in a bank. It's the ability to do what you want while you're still healthy enough to enjoy it. For decades, the 4% rule was the gold standard. They said if you have $1 million, you can take out $40,000 a year and never run out. But in 2026, that rule is dead. With high interest rates, crazy market swings, and the cost of living in U.S. cities, 4% won't even cover your property taxes and insurance in some states. If the market drops the year you retire, which we call sequence of returns risk, your safe plan is ruined. You could do everything right for 30 years, and a bad market in year 31 can leave you broke and eating canned soup. Relying on a math formula from the 1990s to protect your family today is like trying to navigate New York City with a map from the 1800s. It's going to get lost, and it's going to be expensive. Why do we keep doing this? Because the system plays on your fear. Humans are wired for loss aversion. We are terrified of losing what we have, so we follow the crowd into the safe move. But the crowd is usually wrong. The safety trap makes you feel good because you see your balance go up every month, but you're ignoring the opportunity cost. While your money is stuck in a low-growth fund, you're missing out on real wealth-building assets. You're being trained to be an employee, not an owner. The gurus want you to stay in that mindset because it makes you easy to manage. They don't want you to realize that the wealthiest people in America didn't get rich by saving 10% of their paycheck. They got rich by owning assets they could control.
If you follow the standard path, you are making yourself a servant to the system. You are relying on the stock market to stay up. You are relying on the government to keep Social Security alive. You are relying on the bank to keep fees low. You are building your entire future on things you cannot control. In finance, we call this counterparty risk. It means your success depends on someone else keeping their promise. And if history has taught us anything, it's that big systems don't always keep their promises. When the system breaks, the person at the bottom of the ladder, the one who just saved, is the first one who gets hurt. True freedom isn't a pile of paper, it's cash flow you control. The retirement trap keeps you productive for the system. If you believe you need $2 million to stop, you will work harder and longer. You will stay in that job you hate because the match is too good to leave. It is a golden chain that keeps you tied to a desk. The gurus tell you to grind now so you can relax later. But later is a moving target. Every time you get close, they move the goalposts. Inflation goes up, the market dips. Your advisor tells you that you need just a little more. This keeps you in a cycle of stress and consumption. It's a closed loop that benefits the economy, but it kills your spirit. Let's be honest, the match is just a leash. It's time to break the cycle. So if saving is a trap, what's the move? You need a freedom blueprint, and you need it before the next market cycle wipes you out. First, kill the someday mindset. It's a fantasy designed to keep you productive for a system that doesn't care about you. Focus on assets that pay you today, not 2050, today. Second, weaponize your human capital. Your skills are the only asset inflation cannot touch. If you can solve a high-value problem for the U.S. market, you don't need a fund manager's permission to be wealthy. Third, stop chasing retirement and start chasing control. Financial independence isn't a pile of cash, it's the ability to say no to a job you hate while you're still young enough to enjoy the silence. Break the trap. Build a life you don't need to retire from. Thanks for watching.